Hello and welcome to the Loadstar podcast News in Brief, where we are going to be recapping all the main points from last week's supply chain news and flagging what might be important this coming week. Now, in this episode, we are going to be giving details of an exclusive story on CargoWise that caused a bit of a stir for us last week, some details on Hapag-Lloyd's bid to take over fellow ocean carrier Zim, and a look at rates after reports of an upcoming transpacific rate war. All this and much, much more. So let's get straight into the episode. So happy Chinese New Year to everyone listening or watching who celebrates. And I'm going to introduce my guests for this episode. As always, I am with the Loadstar managing editor, Gavin van Marle. Hello, Gav.
Gong Shi Fat Sai, Charlotte.
And I am with the Loadstar publisher, Alex Lennane. Hello, Alex.
Hi, Charlotte.
Before we get into the main discussion with my guests for this episode, I just want to flag a major piece of news from last week, probably the biggest piece of news. This is the long-awaited Supreme Court decision on Donald Trump's IEEPA tariffs, the so-called reciprocal tariffs. And the Supreme Court has upheld the lower court's ruling that the tariffs are illegal. This was a 6-3 ruling. And the reason that we're not going to discuss this with my guests is because we currently don't have too many details. I mean, the administration has previously stated that they're going to find a different way to implement these tariffs, so we might see that. But what we can be certain about is that there will be lots and lots of scrambling in the next few weeks to try and recoup those refunds. We know this is going to be done electronically, but yeah, there's currently not too much information about the timeline, how these will be refunded, when these will be refunded. And so, yeah, I'm sure shippers and forwarders have got their work cut out for them. Good luck to everyone involved. Let's start with perhaps the most interesting story from last week. I'm coming to you, Alex, because this is about your exclusive on DSV's choice of TMS systems after its integration of DB Schenker. So what did you find out and what caused the stir?
Well, first of all, I want to say that it was not a hit job, as some people have said. I'm pretty sure that Wise Tech, the owner of CargoWise, which is a 45 billion Australian dollar company, can withstand an article by me saying that DSV is starting to migrate its TMS. I guess we'll find out when it reports its results on Wednesday, but I do think we just need to put this into context. So when CargoWise introduced its value pack at the end of last year, forwarders started looking for alternatives, the biggest of which, of course, is DSV. Now, DSV itself said in its recent earnings call that it was considering its options, and Jens Lund, CEO, said it's very likely that we will, over time, gravitate towards our own solution. Now, sources inside DSV told me that it started the migration towards Schenker's Tango. Now, it's not going to be overnight. There's no major change. It's just starting to migrate things, so we understand. DSV has not denied it. It just pointed me to a note in its financial report saying much the same thing. But it's not just about DSV. There are numerous other companies, and there's also numerous other TMS solutions coming out. We also ran a story on Australia's Argo Core, which emerged from stealth operations with its platform Cargo Nautics. That aims to identify risk far sooner in the process. But I mean, there's a ton of new entrants, and there's a ton of people contacting us to talk about their own solution. But actually, Charlotte, you were at Manifest. You probably heard more about it than I did. What did you hear there?
Yeah, Manifest was a great event. I've put together a little highlight reel. It's not very newsy, or it's not going to give you much information, but kind of gives you a little taste of what Vegas was like. So I'm going to roll the tape.
Viva Las Vegas! Viva Las Vegas! How I wish that there were more than the 24 hours in the day. Even if there were 40 more, I wouldn't sleep a minute away. Oh, there's blackjack and poker and the roulette wheel, a fortune won and lost on every deal.
So yeah, I think it's clear from that clip that I had a very good time in Vegas, did a bit of gambling, but more importantly, I met lots of people that I've been speaking to online that you don't meet face to face until you go to an event like this. That was great. And there was a lot of talk about CargoWise. I went to an exclusive lunch that was hosted by someone from the industry with a lot of forwarders, and they basically spent the whole hour complaining about CargoWise. It was really interesting for me. I didn't know much about it going into it. I was asking lots of questions like, well, why don't you just switch then? And they all still thought that was very funny because they were like, well, we don't have another option. But they were saying that the first person who manages to make the switch effectively will open the floodgates. It'll be a very interesting thing to watch. But something that they kind of were explaining to me was that there's this huge backlog of data that's all in the CargoWise system. And they kind of put it like you've got an iPhone and you've got, thousands and thousands of photos that go way back. If you wanted to get a new phone, you have to transfer everything over, make sure you're ready to make that switch to a new phone. And that's just on such a small scale. Obviously, you've got this backlog of data that goes back years and years and years. And some of it's relevant, some of it's not. So one of the major forwarders was saying that they're kind of gathering their data, they're cleaning it up, they're making sure that they know what to archive, what they don't need anymore, so that when the switch is feasible, they are able to do it. So I thought that was quite interesting. There was also a lot of talk at Manifest about how different platforms are going to do pricing. So there was like outcome based, there was action based, there was seat based, so all the different things. And I think there was just kind of a lot of talk about this is the year of experimentation with all these different things. I've never been to Manifest before, so I don't know what previous years were like. But I think, like with any event, you kind of, if you go to it every year, a lot of it's quite similar chat. And I kind of got feedback from people who do go to Manifest every year that this year felt like people were not only aware that they needed to make this AI journey, but now they're actually starting to assess their options and take action. So it did feel like this year was quite a pivotal one for Manifest. And I am looking forward to seeing what happens in the coming years. Talking of a period of change, we had a very interesting story from last week that German ocean carrier Hapag-Lloyd was looking to take over fellow ocean carrier Zim. Gav, do you have any details on this? How likely is this to be pulled off, and what effect will it have on the industry?
Yeah, it's a big week for M&A in a lot of the areas we cover. So, and the biggest of those was Hapag, which has tabled a $4.2 billion bid for Zim. That's an all-cash deal. Now, as far as I understand it, the offer has the support of the board, as well as a large number of shareholders. Of course, many of those are in the US because it's listed in New York, so you've got a load of institutional investors there. There has been pushback from the unions in Israel and reports of various strike action taking place there subsequent to the news breaking. I mean, Zim has often been a possible takeover target, but structurally the biggest barrier to that has been the Israeli government's so-called golden share, which it basically it retains a sort of a stopgap control over the company, so that in times of war, for example, that Israel would still have a strategic shipping assets to be able to import and export stuff, particularly import it. And so that's always proved the problem. Now, even though the golden share only amounts to like 1% of the stock capital or something, it creates conditions whereby, for example, no more than 24% of the company could have been held by a non-Israeli citizen, for example. In the case of this, it's been overcome by Hapag has teamed up with an Israeli private equity fund called FEMI, and what they're going to do is hive off Zim's domestic operations as well as the ships that it actually owns, and create this new company called the New Zim, which will own the Israeli assets and continue to operate 3 key services, 2 intra-Europe and 1 to the east coast of the US and back to Israel. For Hapag, they're paying $4.2 billion in cash, which is way above the offer, or the reported offer of Zim's chief executive, Eli Glickman, last year. I think he was offering just over sort of half of that. Or around half of that. And so Hapag will get 87 ships. Now, these are all on very long-term leases. So, in effect, it's paying for 87 ship mortgages, most of which have a tenure of 10 years plus. And the addition of that capacity into its fleet will cement its position as the 5th largest carrier. It provides it more heft in its relationship with Gemini, and crucially, it massively increases its commercial presence in the transpacific trades, although currently how advantageous that is questionable. And then finally, in terms of I can't see any competition concerns. I think they're talking about the deal completing by the end of the year. And yeah, I mean, we suspect that sort of come a year's time, we'll be looking at sort of the international assets within Hapag and a new ZIM taking place in Israel. But all in all, Charlotte, it's been a big week for M&A. As I said, we've had over here in the UK, one of the big mid-sized UK forwarders, Ligentia, is on the block, and it's been rumored to be for a while. But we learned from various competition authorities' review of an offer that it is under offer from Asyad, which is the state-owned Oman shipping company. We've got APM Terminals buying into DP World's facility in Jeddah. And then over in the US, there's the freight forwarder AIT Worldwide is getting some private equity investment from Greenbrier. But we'll have more on that next week because our correspondent in North America, Ian Putzker, is doing an analysis of that deal.
Yeah, it's been a very busy week for merger and acquisition news. We also had an update on the bid to merge the US railroads, Norfolk Southern and Union Pacific, after the initial bid for the merger got rejected by the Surface Transportation Board for missing information. So what's the latest on this one, Alex?
Well, Union Pacific CEO Jim Venus sort of surprised investors actually by announcing that it would resubmit its merger application for Norfolk Southern at the end of April. He sort of played down the decision by the Surface Transportation Board. He said that the proposed tie-up would mirror the model created by CPKC, the last merger in rail there, and it would be comparable in scale to BNSF, and that it would handle about 39% of US rail gross tonnage miles. Now, the CFO, Jennifer Hammond, added that most of the projected growth, so around 75%, would actually come from moving trucks off the road rather than from competing rail operators. Anyway, that's the current status.
We'll have to see if this new information is sufficient enough for them. Gav, as I mentioned at the start of the episode, we are now in the Chinese New Year period. And this is always a bit of a weird one for shipping because obviously manufacturing slows down and therefore shipping slows down. So how are carriers coping with this? Have there been many blank sailings?
Oh, yeah. Capacity in the run-up to Chinese New Year, was clearly sort of over-tonnage. The peak season didn't materialise as they expected. Probably worth just mentioning, by the way, given the sort of trade diversification that we saw over 2025, it's not China, this date, the 17th February to 2 weeks beginning 17th February, is Chinese New Year. It's also Tet, i.e. Vietnamese New Year, same date. And Vietnam is not quite as close as China, but certainly its supply chain gets stretched for a similar period of time. So it's probably worth remembering that because it's not just about China. Anyway, so last week Drury reported that 136 blank sailings have been announced for February. That's up 122% on January. But then that drops to just 53 announced for March. And obviously March shipping is back in full swing again. So clearly they're hoping for some post-Chinese New Year rebound in volumes. I mean, seasonally, the period immediately after Chinese New Year tends to be one of the slumpiest periods of the year in volume-wise. But it's difficult to know what's going to happen after this Chinese New Year because the pre-Chinese New Year peak season petered out. So there may be a bit of pent-up demand that didn't get loaded on the ships before Chinese New Year happens. It's very difficult to foresee.
And how is this translating into rates? Do you have any figures for us?
Yeah, I mean, I have a few. Rate, yeah. Well, on a general principle, talking about pricing week after week has its own sort of tediousness baked into it. But that notwithstanding, there has been in general, spot rate markets are muted for the next 2 weeks because there's just less volume being shipped. If you want to get a quote from a Chinese forwarder for your shipment, good luck in getting anything before March, because basically the offices are shut. It's just the same as happens here over Christmas and New Year. Nonetheless, there's been a little bit. I mean, Transpacific spot rates in reference to that trade have certainly stabilised in the final week before Chinese New Year. Forwarders paying sort of $1,450 to $1,600 for a 40-foot into the West Coast. There is some data from the indices, from WCI, from Zenita as well, Freightos. There has been some data, but it's been the spot rates out of Asia on the Trans-Pacific have been in gentle decline, I would say, this week. What volumes have moved, I'm not really sure. 1 second, please. Here we go. And just on demand, because this is so. Although capacity at the moment is slated to come back into these trades, especially Trans-Pacific after Chinese New Year, we don't have a huge amount of insight into demand levels afterwards. I mean, this is what I was talking about in the previous question, really. I mean, what we did have this week was the Port of Los Angeles reported its January volumes. They were down 8% year on year. All the predictions that I've seen from ports and from maritime analysts in the United States is that they're projecting there'll be year on year decreases in January, February, March, possibly even into April and May. And there's not a great deal to suggest that any of that demand picture changes significantly just because China returns to work, right? So overall, on balance, yes, a rate war post-Chinese New Year is probably looming unless there's a massive constriction of capacity.
Good news for shippers anyway. Alex, what about in air? How are things looking over there?
Well, we decided to give rates a pause for the week because of Chinese New Year. Instead, actually, I looked at the UK air freight market and discovered that London is no longer the be-all and end-all of air freight, and that regional airports are doing much better. So Glasgow in particular, Birmingham, East Midlands, all seeing a lot of growth while London airports are flatlining. That was sort of by the by. We also looked at air freight capacity globally. I spoke with Marco Blumen from Avian, and he gave lots of really interesting stuff about where the capacity growth, half of the deliveries this year are going to go to the Middle East. So that's going to be quite an interesting change of deployment. Capacity is going to be higher than demand, so there's that to worry about for airlines. And route data is already showing that capacity is shifting. So Asia to Gulf and Asia to Europe lanes have been up sharply in capacity terms. China and North America has gone down. And extra lift from China and Hong Kong are likely going to be absorbed on strong sort of outbound legs. But as ever with air freight and e-commerce in particular, the backhaul is going to be the problem for this year. We're going to follow this article up with one on demand this week. So stay tuned for that.
Look forward to it. And could you give us a recap of what was on premium last week as well, please?
Yeah, sure. There's a fascinating article on MSC and its forwarding ambitions. There's a look at the UPS fight with the Teamsters, an article on Hapag-Lloyd and Zim, of course, and an expose of the rumours circulating in M&A circles, including in Abu Dhabi, including Abu Dhabi ports, that is, which may have sort of a refound confidence after the troubles at DP World this week.
Yeah, speaking of, we probably should address the news that the CEO of DP World, that is Sultan Ahmed bin Sulayem, was named in the Epstein files. Apparently, he had exchanged hundreds of emails with Jeffrey Epstein over a decade. Since this, he has left the company, and DP World has appointed Yuvraj Narayan as the group's chief executive officer. He's been at DP World since 2004. Gav, did you want to say something about this?
I mean, it's a pretty horrible story all round, really, isn't it? But the catalyst for the departure really seems to have been the announcement from the Canadian fund La Caisse that it would halt its future investments with the company. And that would have been a really big blow because because Lacasse is a very key source of finance for DP World. They have a very it's a very enmeshed relationship, and there's a lot of money that's been ploughed in by both companies actually into their joint venture investment platform. Look, but on broadly, look, a company this size across all these geographies and tens of thousands of staff can never really be about one man. I mean, I have noticed over the years or over my career of being a business journalist and the number of people that I've interviewed that companies can very often sort of take on the characters and personalities of their leaders. So it's going to be very interesting to see how DP World now develops under Mr. Narayan. I mean, he knows the port industry inside out. So I think really, and I don't want to sort of brush over, the events that have gone, but I think in terms of looking forward, it will be interesting to see how the different personality impacts the global organisation.
Absolutely. Looking to the upcoming week now, I'm really excited because I'm going to be guest starring on BIFA TV. That is the British International Freight Association's YouTube channel. And I'm going to be doing a quick Q&A about things that I've been speaking to forwarders about and some major topics that I've been noticing recently. So I'm not sure when that is going to be out. That's completely up to them. But we are recording on Monday. So I'm sure that will be out very, very soon. Gav, do you have anything on your radar for the upcoming week?
Yes, Charlotte. I've got TPM, Transpacific Maritime, in case no one knows what that is, the world's biggest shipping conference. That's coming up the week after next. I'll be getting ready of that. Very interested to see whether we're going to see a resurgence of the port fees debate. I don't know if you remember, Charlotte, from last year, if you remember Soren Toft's speech, but it certainly the whole issue of the USTR 301 port fees kicked things off last year. This year, courtesy of the Maritime Action Plan that was announced by the White House this week, which is threatening to levy even higher fees on every single non-US ship. I mean, that's going to be that could promise massive taxes on the American consumer. So yeah, looking forward to that. It looks like it'll be a new debate, but could be a rehash of an old debate.
Yeah, so much has happened since the last TPM. You certainly won't run out of things to talk to people about.
Right.
I'm very jealous that I'm not going to be there. And Alex, what about you? Have you got anything on your radar for this week?
So, yes, as I said, we'll be looking at air cargo demand in 2026. We'll be looking at cyber attacks, particularly in the port sector and what that might mean. And of course, there's WiseTech Global results.
Lots and lots to look forward to. Thank you both so much for joining me this week for all your good insights.
Thanks, Charlotte.
Shishini, Charlotte.
And thank you everyone for listening to and watching our podcast. If you're not watching, then do head over to our YouTube channel at the Loadstar Podcasts to see all the wonderful things we're doing over there. Please like, comment, share, subscribe, all of that. Thank you so much for listening, and we will see you next week.